Yo, what's up traders? Welcome to a new video. So in this video, I'll be going over what is swing trading, who are swing traders, is it something for you? First of all, I would go over just the informational side, just explain to you what it is, and later on I will go over the charts and show you a few swing trading examples. All right, so what is swing trading? It involves holding onto stocks or other assets for several days to weeks to capitalize on expected upward or downward market shifts. Unlike day trading, swing traders ride the waves of market momentum and aren't necessarily looking to close out positions by the end of the day. So day traders, scalpers, they trade the same day, scalpers even multiple times in a day, and swing traders, it's easily these swing traders can easily hold the trades for a few days and even weeks. Personally, I'm a swing trader myself, and the longest I've held on to a trade was over a month. So if you're a swing trader, that should sound familiar. Let me show you what let me go over the tools and indicators. Swing traders, they rely on a mix of technical and fundamental analysis to make their decisions, and they use indicators like I personally use the moving averages a lot. You can also use the MACD, the RSI, to identify trends and potential reversal points, and tools that provide insights into volume and volatility are also not necessary, but it's really nice to have. Just to see where's the volatility. Is it in the midweek or is it at the end of the week? Personally, I use the moving averages a lot. Let me show you, let me go over the necessary skills. So successful swing trading requires patience, to wait for the right trade setups, and the decisiveness to act quickly when opportunity arises. And swing traders, they need to be good at managing risk, as holding positions for several days introduces different challenges compared to day trading. So risk is really important, managing risk, and you also need to be updated of market movements, market updates, because let's say that you have a EURUSD buy for 3 days, you're in profit, but then you know that at the end of the week on Friday, NFP will be announced, and the data will be announced. So what are you going to do? Do you wait for the price to maybe go into the right direction, or do you close, let's say, 80% of the trade, or do you close the entire trade? You really need to be good at managing risk, and also you don't need to be scared of going to bed while you're still in a trade. And the pros and cons. The main advantage of swing trading is the reduced need to monitor positions minute by minute, unlike day trading. And however, the strategy requires holding positions overnight, which can lead to increased risk from market gaps. So as I mentioned already, swing trading, you don't have to stare at the screen the entire day. You can easily take a trade, let's say on Monday, and let's say every day at the end of the day, you just take a look at it. Okay, price is now going up or down, and it could easily take you 10 to 10 minutes a day to just monitor it. And see what price will do, and based on that, you just adjust your risk. You can easily be in a trade for a week or 2 weeks or a month if you're a swing trader. But the downside is that it also can take quite a long time to become not really profitable, but to have a profitable trade. So let's say that I'm in a trade and I'm in drawdown for 2 weeks, and then finally we see that the buyers step in and price goes to the upside, and then after 3-4 weeks, then my trade finally is in profit, and it hits the TP target. But then you are just about 1 month further, right? So if you're a day trader or a scalper, you can do more trades. So is swing trading for you? To be a successful swing trader, you need to be comfortable with medium term holds and have a good understanding of market trends. It's perfect for those who can monitor the markets every second but still prefer a more active approach than traditional investing, right? So if you don't want to monitor the market every single second, every single minute, if you have a 9 to 5, for example, then this is definitely something for you, swing trading. Let me show you the chart right now, and I go over a few swing trading trades. Okay, so this is the Euro USD pair. Let me see. So over here, we see that we start. Here is the range, and then we go to the upside. First, I have to let you know what the time frame is. We're looking at the 4-hour time frame. Swing traders, they use the 4-hour, the daily, and sometimes even the weekly. They use the weekly for just analyzing the pair, but not really as an entry time frame. More for an overall long-term trend, and even the monthly, a few swing traders look at. But just for entering 4 hours and the daily. Okay, so over here we see moving averages all point to the upside, and we can easily take a buy over here. The stop loss, the 200 exponential moving average. This is the 50, and this is the 200, and this is the, I believe this is the 10. But over here, let's say that we target this over here, this target, this high, and so this is a 1 to 2.36% gain. In, let's say, this was 10 July, and this is 11th, almost 12. So in about 2 days, we made profit, which is good and also quite fast as for a swing trader. Let me show you another opportunity. Over here, we see it went to the upside, right? It broke the high over here. It made a retest. You can also draw a trend line. Finally, we see that it crosses the trend line with a big, huge candle. This is, I think it's even news. No, it's maybe it's 11 o'clock. I'm not sure. But we take the buy order. We place our stop loss here at the 200, and this is eventually a 1.1 to 1.8 risk reward ratio trade, but yeah, it even goes higher. So it entirely depends on your risk management, and what type of what amount of profit you are satisfied with. But this was a nice 1 to 4 ish risk reward ratio trade. And you can also use your moving average for a stop loss, for a trailing stop loss, meaning that, let's say that once you have reached the 1 to 2 risk reward ratio, let's say here, so here, let's say that once you have reached the target, you can decide to throw your stop loss at the 50 exponential moving average. So that means that over here, when it crosses, then you get out of the trade, which is here. So that means that in total the risk reward ratio was 1 to 3, and you get out of the trade the 29th of August, which means that you were almost a month in this trade, right? But it is a profitable trade, so that's the most important thing. You can also take RSI trades. So you wait for the price to become oversold, which is here. It's oversold. You wait for it. You can take a quick one, which is here when you see the engulfing candle over here. This is an engulfing candle. You take the trade, you target the high, the latest high over here, and stop loss just below the latest low here, or even here if you want, whatever you want. And it's a 1-to-1 risk reward ratio trade. So that is something you can do. Or again, I mentioned also in other videos, it's a more advanced strategy, but you can trade divergence, RSI divergence trades, which means this is a low, this is another low. Over here we see that this low is lower, right? This low is lower than this low, while this low is lower than this low. Do you follow me? So on the RSI, we see that price here is low. When we look at the RSI over here, we see it's still low, but this is higher than this, while over here we see that this low is lower than this. So once you see that, you wait for big candles, in this case buy candles, bullish candles, to appear. And let's say it's a nice, okay, let's say over here, big candle, and we target the latest high, which is here, 1-to-2 risk reward ratio trade, and profit. So if you have a 9 to 5, I recommend swing trading. You don't have to watch the market the entire day. You can easily just check, let's say at the end of the day, okay, now price is over here, I do nothing, or I take the trade, or yeah, whatever you want, I close the trade, and just monitor it every single day. At the end of the day, once once you're finished with your job, with your work, you go home, you just check the markets, and that's it basically. So if you like this video, give it a thumbs up, subscribe, and I'll see you in the next video.